So today's video is about SBI Focused Fund. It has been in existence from 17 September 2004. The present fund manager is R. Srinivasan. He has been managing the fund from May 2019, almost like 6 years now, right? The exit load is 1% if you are redeeming before 1 year. As I have always told you, any equity investment, the minimum time horizon has to be at least 5 years. So the benchmark would be like Nifty 500. So the AUM right now they are managing is around 36,000 crores. So the direct expense ratio is at 0.77%. The regular expense ratio is at 0.8%. That means the additional 0.8%, some of it, most of it will be going to the distributor, and some of it will be used by the fund for the marketing expenses as well. Say, for example, if an advisor who is charging like around 0.6, 0.7% plus GST would be charging same as the distributor. Again, if you are going to a distributor or an advisor, make sure that they are helping you with the performance tracking against various indices, and see that how it is suiting your asset allocation and the goals as well, right? So now let's look at the analysis with different indices. So I have compared it with the Sensex, Nifty 50 and Nifty 500. So on it, again, the minimum time horizons you have to look at is from 5 to 10 years. So again, despite the comparison between 1 to 3 years, this is a bit meaningless for the any equity investments. Ideally, it has to be more than 5 years. So on a 5 year, 10 years, 7 years, and 10-year basis, on the median returns, this fund has delivered. Right, both the direct and the regular funds have outperformed the indices. Right, on the on the negative instances as well. From year 5 onwards, there are no negative instances. Oh, luckily from year 3 onwards, there are no negative instances for this fund. That means like the downside management is bit strong, right? See, only on the max return they have been outperformed. That too, it is not a significant outperformance. If you look at it, Nifty 500 has outperformed on the max return on a 2% basis. But the most important part would be the minimum return and the median returns, because 50% of the people end up here. So if you look at the minimum return to median return, approximately there is a 3 percentage points difference. Same is the case with the Sensex and the other indices as well. But these funds have delivered better returns compared to the other indices. Right now, let's look at different time horizons, how it has done. So from 2014 to 2018, this fund has done an absolutely fantastic job. Right? If you look at it, 100 rupees invested in this fund would have given a 145% of absolute return. On the direct side, it is 135%. Compare this with the indices, right? Nifty 500, it is like 86 percentage points. So Nifty and Nifty and Sensex, it is around 72 percentage points, right? So approximately an outperformance of 30-40 percentage points. So even if somebody has entered it at different places, so there are not steep drawdowns. The drawdowns are just comparable to the index only, but the up moves are slightly better. So that way, that's the reason why if you look here as well, on the rolling basis, the fund has done really well. So even on a 3-year basis, there are no negative instances, right? So now let's look at from 2019 to present day. This is pretty much from the time from May 2019 onwards, this fund manager has taken over. So 2019 to today's performances can be attributed to the present fund manager, right? So this is the performance of the past fund manager here, if you look at it. Now, how the present fund manager has done. So pretty much till this point, right? For almost 1.5 years, all the indices, it moved along with the indices, right? And there was some time between 2021 to 2022, there was a spike, right? But again, eventually the fund has settled at a similar place compared to the indices. If somebody has invested seeing this spike, actually the person would have lost more than the index, right? So the present fund manager, his performance has been just been in line with the index, especially if you observe from this point onwards, right? There isn't much of a difference. The major difference the fund manager could get was from 2021 to mid of 2022. So if you look at it this way, the past returns have been like really good. So if somebody has entered taking the past returns into consideration, so probably from 2019 onwards, the returns till 2021 were flat. So again in the 2021, there was some increase in the returns, right? From 2020 mid onwards till 2021, there was a spike in the returns, and again the returns were following. Actually, if you look from the peak, there was a huge correction in this fund. Say from 199, this fund has gone down to 156, 150, 160. So that is like almost a 20% correction. Okay. So whereas at the peak, if you look at it, the index was at 168. Even at the bottom, it was at 145, 146. So that is a 10% correction. The drawdowns has been like lot steeper. So what is skewing the performance of this fund is the performance from 2014 to 2018. Now let's look at from 2014 to present day how the fund has done. So if you are looking at it, there is a huge gap here, right? Somebody who has invested 100 rupees in 2014 was having a 567% of absolute return. Compare this with Nifty 500, the absolute return is like 357%, right? But if you are looking from 2019, from the time this fund manager has taken over, right? So at this point of time, Nifty 500 was at 183 and here it is at 270. So pretty much there is a doubling effect which has happened. It has performed in line as we have seen it from here, right? So as a result, always again, the past performance, if somebody has invested seeing in this fund, seeing the performance from 2014 to 18, that doesn't mean there is a reflection of the performance in the future. And at the same time, the fund performance was in line with the index from 2019 to 20, 2019 to present day, slightly above the index. That doesn't mean it cannot outperform in perform in the future. So this video is for educational purpose only. It is neither a recommendation to buy nor sell the asset class in discussion. Whenever you are choosing to invest in the equity, choosing to invest in the active funds, always remember to compare them with the index and at the same time see if they are suiting your asset allocation and the financial goals as well. In case you are having a distributor or an advisor, you have to extract all these tasks from them. Thank you.